Great opportunity to practice a trade, learn from the experience, and again develop some skill. We are running some of these flash trade ideas from time to time during the week as the market provides opportunities that we see as valid for practice purposes. Before I present the trade idea for today, which is going to be a calendar spread, before that, I would like to make sure that you see the disclaimer on the bottom part of the screen and you read it carefully. It is important information. This is not a flash stream for financial advice purposes. It is for practice and support of our clients, users of our technology, attendees of our courses, and everyone else can certainly benefit from it from that educational point of view. Make sure you read it carefully so you are with me. So the trade plan, as you can see on the screen, is going to be a calendar spread on IBM. You have all the parameters on the screen. I will explain the rationale behind the trade. But again, the parameters are on the screen. We are talking about trading IBM, which will report earnings on January 23. The calendar spread is made of an option strategy that uses two different expiration dates, in this case, December 9 and December 16. And the same strike price, which is going to be 155, as you can see on your screen. The entry is going to be that when the market opens today, it's either at the same price as yesterday or above. We're gonna go in. The target is located a bit higher at 152.45. The risk per spread, if we were to take the trade now, it's $31 per contract, I should say, per spread. But anyway, let me explain the rationale of the trade here. So the rationale of the trade, it's quite simple as well as quite powerful. So what we have is we have IBM on a daily time frame providing us with an up climate, which is confirmed. That up climate also comes accompanied with implied volatility of the calls in blue color above the implied volatility of the puts in gray color. Therefore, there are buyers in the market. And on top of that, the group, which is computer services, okay, both in the medium and in the long term, that grouping for that stock shows a positive strength, if you wish, as we can see, blue color as well. So in other words, the stock and all its group, all the other stocks that belong to computer services, happen to be showing strength, and that stock is now beginning its own climate. And on top of that, from a market timing point of view, we just got an Elliott wave turning point, which also comes with a green UFO. So with all of that, getting in would make sense. Of course, if you are a UFO trader, and maybe you are an Elliott wave trader, and this also makes sense to you. Again, this is for practice purposes, but just sharing the rationale behind the trade. And if you were to get into this trade, if we look higher, we can see here with the pink color, the Elliott wave projection. So the wave that potentially has started here should travel all the way to here. And when it gets there, actually we have two red UFOs that would very likely bring the prices back down. So somewhere around this price point, we should be taking profit. Now, to be just a bit more conservative when on profit taking, I am using a speed bump, which I am projecting from that higher price point. And notice how that speed bump coincides both with the UFO and the pink area. So out of being conservative, I will use the pink area as the target since the UFOs are a little higher. This is basically 152.45, which is the target that was mentioned a moment ago here on the sticky note. Exit, it's 152.45. Okay, so if we were to construct a trade of this sort, right? If we were to construct a trade of this sort, and by the way, and let me rephrase the entry. So the entry is if the current price today is going to be equal or greater than yesterday close. So if it's going to be 148.9 or above, then it's time to get in, expecting to reach the upper pink zone. Okay, that's the plan. How can we profit from such opportunity? Well, we can do it by building a calendar spread, which I am shooting for today, given the low volatility environment on that particular stock. And with a calendar spread, if we were to use the 155 strike, which is slightly above 152.5, right? It's 152.5 would be the target, right? 152.45. So I went one strike higher to get a bit more deltas. So if we go to the 155 strike and I was to buy the 155 that expire on December 16, and I was to sell the 155 that expires in December 9. So this basically would produce a trade. Let me graph it. This would produce a trade with a maximum risk of $31. The most we can lose is 31. Why? Because we are paying 31 for this trade. Again, this is at the current price point. When the market opens, prices will be moving. But that would be the risk of the trade because it's a debit type of trade. So the most you can lose is that. And then, of course, if the stock goes up, if the stock reaches that 152 something mark, so we're going to be making, if that was to happen in one day, around $30+. So if we arrive there in one day, it's kind of like a one-to-one. But if instead of arriving there in one day, we arrive in a few more days time, so notice, let's say we arrive on 12/7, so now reaching 152.40 something, we now produce a P&L of around 55. So now it becomes like a 2-to-1 almost. And again, and then you would do a roll, okay? And then you would do a roll, which is what is you have here on the notes, right? So if we are getting very close to December 9, and December 9 is about to expire, then you will want to sell options using December 16, which would add more premium to the trade and therefore reduce the risk even further, okay? But again, this would be a trade management instruction, which is beyond the purpose of the flash trading ideas. I'm basically just sharing the rationale of the trade and how to construct the beginning part of the life of this trade with a calendar spread. And then, of course, we can do many things with options when it comes to their management, okay? We run monthly sessions. You can see on our calendar on tradewithufos.com/calendar. You can see our calendar of sessions, and you will see that once a month per coach, we get together, and this would be the perfect environment to talk about trade management and many other things, okay? But right now, so here's the trade opportunity, okay? It's a calendar spread with IBM, December 9, December 16, using the 155 call strike. I would say pretty ideal for practice purposes. Maximum risk is $31. I guess that even new traders could afford that type of risk. I looked for a trade of very limited risk on purpose just to help with this practice, which is the purpose of these sessions. Again, not financial advice. And, hopefully this helps. My friends, it's been my pleasure to be part of this. We'll see you on the next one. Make sure that you are connected on our YouTube channel with the notification bell. Make sure that you are also connected on the LinkedIn page. That's probably the best place where to be to receive real-time notifications when we are live doing the flash trading ideas, because we do that randomly because we depend on the market. So whenever the market provides an opportunity that we identify and we see as valid for practice purposes, this is when we go for it. My friends, you take care. It's been my pleasure. I will see you on the next one. Bye-bye, everyone. Take care.